So welcome to another episode of Phillip Trading Podcast. My name is William and our speaker today is David Low, a full-time trader and also the managing director and partner of X Modules Trading Group. Okay, so today David will do a preview for his webinar next Wednesday on the 27th of April on how gold prices correlated with US interest rates and what is the current cycle of gold and how to trade them. Okay, so it has been a while since I see you, David. How have you been?
Hi, William. Good to see you again, William.
Yeah, good. Yeah. So I guess I will pass the section to you for you to do a quick review or a preview for our audience about your.
Yes, thank you very much, William. Yeah. So we of course, we'll spend a bit of time talking about the favorite investment and the favorite commodity among Malaysians, which is gold. Okay, they always have goal in mind. And it is interesting to note, actually, I read a news article last year. Bernama did a news article and was saying that during that time, there's in one poll that surveyed all the people that took some their EPF withdrawals. A lot of them actually were thinking of putting, almost half of them were thinking of putting their money, their EPF withdrawals, into investments in gold and stocks. Of course, in last 2 years, stocks was hot as well in 2021, except people were thinking of that. Okay, and recently also during that EPF withdrawal, a lot of people also were seen in the goldsmith shop. So gold is one of the favorite, investment and trading instruments. That's why we are talking about this, this subject, okay? And then the interesting thing is in the US, of course, interest rates are going up, okay? And the popular notion is if interest rates go up, then can gold continue to go up, okay? So that's the thing that we want to discuss, right? So let's get on to a few slides to get the juice going for the next week's webinar, okay? Let's talk a bit about the current times. Okay, we suddenly live in very, very interesting times, right? So we have, of course, these things that are happening now in the world, which is creating a lot of volatility in the markets, right? You have the conflict between Ukraine and Russia, and that is creating a lot of things that's happening and actually cascading down to our lives. The price of fuel, energy, the price of commodities, those things are really going up, right? So we see that in our lives as well. In terms of the everyday goods that we buy, even things, very basic things like wheat, very basic things like even our chicken and things that we have in the market, right? So things are slowly creeping up in terms of the prices, right? And in the US, of course, the US interest rates, you've seen the Fed announced just yesterday, you've been following the news that in the next meeting in May, they're going up by 50 basis points, and the subsequent meetings looking at a more aggressive stance to continue to hike interest rates, right? And that's because inflation, okay, the conflict in Ukraine, last year, the prices of all commodities have been going up and the inflation have been running up very high. In fact, if we later look at the chart, inflation is something that the Feds are trying to control, right? So the other thing, of course, is the pandemic, right? A lot of people may have forgotten about the pandemic. It's still with us, okay? But what is worrying about the pandemic is, or what is in everybody's mind in terms of the pandemic is, what is China's response to the current outbreak in the country, right? Because China has been adopting the COVID-0 strategy for the last 2 years, right? And then now there is an outbreak there. What is China's response? Because if there are continued lockdowns, then there'll be some repercussions, if not some, very, very severe repercussions in terms of the global supply chain. It will be deeply affected, right? And that again is going to feel and going to feed into inflation, right? So all these things are currently in play in terms of whatever we're investing, whether in equity markets, in gold or other commodities. These are all in play currently, right? So what shall we see in terms of talking about gold specifically are these factors, right? So we have here 3 charts, and very, very interesting 3 charts, right? Basically a chart on inflation. You see on the left, the monthly chart. This is the United States inflation rate. The one in the center is the one on the left is inflation, the one in the center is actually interest rates, and the one on the right is gold prices, okay? Now, in terms of all these three charts, okay, normally you would see some of the charts need to be down, okay, but you see all these three things all on the upward rise, okay, because in terms of popular notions, if interest rates were to go up, gold is going to be affected. Normally, gold will move inversely to interest rates, right? So let's first look at this chart, this particular chart here, which is the, of course, is the what do you call that, the US inflation rate. And if you have been following the US inflation rate, okay, last month in March 2022, right, the interest rate, the inflation rate in the US has locked in at 8.5%, right? And this is the highest since December 1981, okay? And this, of course, is fueled by energy prices, which have propelled that US inflation rate to a 40-year high, okay? And then on the middle, okay, in the middle, you see basically this is a very interesting, what do you call that, chart actually. It's a chart of the micro 10-year Treasury yield futures, okay, which basically charts the 10-year Treasury yields, okay, and recently it knocked in at the high of 2.98. So we are basically, in terms of the 10-year yields, we are touching the 3% or very close to 3%, right? And it's likely if it breaks the 3%, then we could see upward drive in terms of the interest rates. Okay, now these two charts is very strange in the sense that the third chart, which is also a chart of the monthly gold prices, you can see that this is also on the upward rise. Okay, normally if we have the first two scenarios, you'll see gold, what do you call that, coming down, right? So this is very interesting in the sense that when we do the webinar, we will consider and discuss what is going to happen, okay, in terms of gold prices as inflation continues to looks like still continue to be on a upward trend, and interest rates, as we say, the Fed is continuing to have a more aggressive stance towards hiking interest rates, right? So will gold, okay, finally, what do you call that, have to bow down to these developments or not? Okay, so this is going to be very interesting, and this is what we're going to talk next week on the 27th April. We will go in and look at what is the current technical outlook for gold. Okay, which phase is gold now? Is there a lot more upside, okay, or is it going to come down on a corrective mode? Because a lot of people are invested in gold, right? So this will be a very interesting thing to look at and discuss during that time. Okay, and we will look at different price direction scenarios, and also look at the trading opportunities available, okay, in terms of the futures contracts in gold, and also the futures contracts on interest rates. Okay, this is going to be very interesting in terms of also the interest rates, right? So if you feel that interest rates are going to be continue to what do you call that, go higher, then how do you participate in interest rates to make an opportunity to make money as well? Okay, so that's something that we will discuss next week. Okay, and of course we will have a live chart setups to look at the live market, because we're starting in the evening, so we have a chance to actually look at the live action in the prices as well, right? So that's what we're going to cover next week on the 27th of April. Okay, please do join us during the webinar. Okay, the webinar will of course be entitled "Will Rising US Interest Rates Finally Kill the Gold Rally?" Okay, back to you, William. Anything on your side?
Thank you, David. Very interesting preview, especially the part that the interest rate rise with the goal. I think this is something that a lot of people have questions in mind. So if you have this question in your mind, why gold prices is going up together with the interest rate, please join our webinar next Wednesday on the 27th April, okay, to understand the correlation. So if you want to join, you can just visit our Phillip Futures website, and you are able to register for the webinars from our website, okay? Or if you can't find the link, try to PM us on our Facebook page. We are able to send you the registration link, okay? So if you want to know how to trade gold futures, how to trade the interest rate futures, feel free to reach out to us as well, okay? Just send us a message and leave a comment in the comment box below. We are able to, we will try to get back to you the soonest possible. Okay, and thank you once again, David. I guess I will see you during the webinar.
See you then, and see everyone then, 27th April.
Bye-bye.